Hi friends, today we are learning a simple day trading strategy called gaps trading. It's very simple. Let's see how to trade gaps. So there are two types of gaps, gap up and gap down. You may be aware already. So there are two types, gap up and gap down. So what is gap down? The opening price is less than the previous day closing price. That means if suppose bank nifty is closed at 43,300 yesterday and next day it is opening at 43,200, so you can see there is a gap of 100 points. Okay, so yesterday it was 43,300 and today it is opening at 43,200, so that means there is a gap of 100 points. Okay, the same way gap up. Okay, the opening price is higher than the previous day closing price, so that will be 43,300 yesterday and 100 points more today. That means 43,300 opening. So our market will be opening at 9:15. So 9:15 price I'm talking about. So we will be comparing with yesterday's price. Okay, yesterday it was closed at 43,300. If it is gap up, then it will be 43,400 or 500 or 250, sorry, 350 or 450, whatever it is. So there will be a gap of some points. Okay, if it is gap up, if it is gap down, there will be like 250 or 150. There will be some gap between the opening price and yesterday's price. Okay, so we are going to trade that gap. Okay, first we will see how to trade this gap down. So bank nifty is opening gap down. There are high chances of further price drop. So we are expecting, since it is gap down. Gap down means there are like big players are selling the market. Okay, so we are expecting the price drop, a further price drop. But usually before further price drop, it will fill the gap. Okay, first it will fill the gap, then only it will go down. Okay, usually that is the way bank nifty and nifty is behaving. So what we will do is we will wait for that gap to fill up. So for example, if bank nifty was 43,300 and it is gap down to 43,200, then we will wait to bank nifty to come near around 43,300. Okay, somewhere near 43,300. So once the gap is filled, so we will be waiting for a reversal candle. So it will be in 5 minutes candle, we will be waiting for a reversal candle. That means, so there are different reversal candles are there. So we will wait for a shooting star in let's say it's an example. So anything is fine, like bearish, any kind of bearish candle should be fine. So we will be waiting for that kind of a candle. Then once we have that confirmation, okay, this is going to reverse. Once gap is filled, so there is a higher chance to show a reversal candle. So once that reverse candle is present, so we will sell a call option or buying a put option. Okay, either you can sell a call option or you can buy a put option. Okay, so the advantage of selling call option is like, if suppose the reversal is taking some time also, you will get money. Okay, because right, selling option, there is a higher chance with the time. Okay, if it is taking time also, the price will be reduced and you will get some money. Okay, so buying put option, again there is an advantage. If it is going too fast and it is going too down, then you will get more price than selling a call option. Okay, so both are having its own advantage. You decide and choose your option. Either you sell a call option or buy a put option. Okay, now how to exit this trade? Okay, so exit this trade if the market is going above the last day price. Okay, if it is market is breaching the yesterday's price and it is going above. Okay, so and sustaining. Okay, if it is going above, let's say it is going above to 43,300. Let's say it is going to 43,350 or 320, 25. So we are seeing a bullish candle there. Okay, above that last closed price, then close this trade immediately. Okay, because we got a confirmation saying that uh, bearish trend is gone. Now market is ready to go up. Okay, don't hold this. Maybe market will reverse, we don't know, but we don't want to take a chance. This is our strategy. We will be closing that trade then and there. Okay, don't hold this trade assuming it will come down like that. Okay, so there's a like that's a very big risk. Don't hold that trade. You took a trade and it goes wrong, close it. Okay, and booking the profit, it's up to you. You book the profit based on your like when you are seeing a reversal candle in your downtrend, or in your uptrend, you are seeing a reverse candle, you close this price, close this trade. Okay, so then we will see how to trade gap up. It's opposite to gap down. Okay, so bank nifty is opening gap up, and there are high chances of further price appreciation. Okay, earlier it was depreciation, now it is appreciation because it was gap up, so big players are ready to buy the nifty. Okay, so now we are going to play that trend. Okay, so but usually before the price goes up, it will fill the gaps. Okay, what will happen, we open gap up. Okay, it will come down and fill the gaps. Usually if it is for 43,300 yesterday, it is opening 43,400, 100 gap, then it will come back to 43,300. Okay, around 43,300 somewhere nearby. So the same thing, you wait for that gap to fill, and a reversal candle. Okay, a reversal candle can be hammer, morningstar, anything. Okay, any reversal candle you can see. So once you have that confirmation, sell a put option or buy a call option. The same advantage is there. For selling, time is the advantage, and call option, if it is very fast and going in one direction, you will get more money than selling an option. Okay, it's up to you to take a decision. Okay, so and important, exit this trade if the market is going below the last day price and sustaining. Okay, and bearish candle below last day price. Okay, this is the condition for exiting. This is very important. Exit the trade. Okay, so this is our stop loss. Exit the trade and come out of the trade once you have the confirmation. Don't wait for market to reverse and come to your thing. Okay, then that mindset is not at all good. This is a strategy you should follow strictly. Okay, and don't do. So what don't do? As I said, don't trade if the gap is not filling. If gap is not filling, this is invalid. Don't trade this trade. It is mandatory to fill the gap in a, it is not mandatory to fill the gap in a single day. There is no rule in market like once the nifty is gap up or gap down, so it will fill the gap same day. There is no rule like that. Okay, so it can fill the gap or it cannot fill the gap. Okay, so if it is filling, we will trade it. If it is not filling, we will avoid this trade. We have other strategies, we will follow that. Okay, don't we will not we are not going to follow this strategy. Exit immediately if the set criteria for exit is meeting. As I said, there is an exit criteria I told for each gap up and gap down, right? So follow that strictly. Okay, don't hold this trade. This is very simple. Try this. So you can try it, and maybe you can do some paper trading with these conditions and see if it is effective or not, because this is, as per experts, this is working in market. Okay, so and I tried it in couple of scenarios. Even it was triggering my stop loss, but yeah, so this is actually giving probabilities, more probabilities. For example, 60 to 40 or 70 to 30, like that you will get it. Okay, this is all about how you are handling your stop loss. Okay, trade professionally. Don't blindly do this kind of strategies. Understand this strategy for educational purpose, I am telling. So you understand this strategy and try to execute it. Okay, thank you.